Hello, everyone. Good afternoon to another vibrant edition of the Real Estate Guys, joined by Sean Johnston in Montana and Alan Jacobson in Florida. And I'm here in Super Bowl country, Kansas City. So, pleasure to have all of you guys here today. Wanted to talk today about something very near and dear to all of the home purchaser buyers out there, including the home sellers. And that's, basically why should we entertain a lender at the very beginning of the process? Why should we get involved with a lender at the very beginning of the process? And we all have stories of why that's important, and we're going to share those with you, kind of pros and cons, so you'll kind of navigate that with hopefully a little more ease. So why don't we go to Alan down in Florida and see kind of where he'd like to take us with this topic?
Okay, thank you, Trip. And how do you guys like my Florida background here, huh?
Yeah.
Pretty cool, right? Right? Pretty cool. Not sure exactly where it is, but anyway, um, the most important reason to start with a lender, even before you start the home buying process, is to know what you can afford because they're going to look at your income, they're going to look at bank statements, they're going to want to know how much cash you have for down payment. They're going to help you with that. They're going to look at your entire financial picture. They're going to look at the homeowners association costs if there's an HOA. They're going to look at taxes, insurance. They're going to put all of this together and tell you what you can afford. And that, plain and simple, is the number one reason why you should go to a lender first, so you know at the very least the price range of home you can afford. And now I'm going to turn it over to Sean.
Well, thank you. I think you're absolutely correct that you need to know exactly what your price point is. The sad part that I've experienced with clients in the years past is before I got smart enough to help people start at the right place was we would go out and look at a house and maybe they were looking at $400,000 houses based on what they thought that they could afford, and then they get done with their lender and their top end of their price point's 325, and that's deflating at best, and in many cases completely thwarted a person from moving forward with the process just because all of a sudden every house that they look at from that point forward pales in comparison to what they were looking at. $75,000 in any market can make a fairly substantial change in the caliber, the quality of the homes that you're looking at. So really important from that perspective. The other side of that, in my opinion, right now, especially with the new rules in real estate that we've been talking about on and off over the last few months, is that you have to remember that you're going to have a professional fee that you will be likely paying at least some piece of. So when you, as a buyer, enter into the purchasing process in today's world, you're going to engage the services of a professional buyer's agent, and that person is going to charge some form of a fee for that service. In some cases, the seller will help to cover a portion of that fee or maybe all of that fee. But if they don't, uh, or it's only a portion, your lender's going to need to know what the cost of purchasing a home is going to be for you on that piece of the puzzle, and they will build that into your lending picture so that they can make sure again that they're giving you an accurate picture of what you can afford. If you're somebody buying a third or fourth home, you've got a bunch of equity in your property, uh, you've got a sizable savings account and all those kind of things, that's probably not going to be a big issue. If you're a first-time home buyer and you've been working for years to save up a nest egg to be able to go buy a property, that will likely be something that you're going to need to be prepared for. So that's another piece of this puzzle that's going to matter in the future that I don't think a lot of people have really considered at this point. And so far, we haven't gotten any direction from the lending institutions, Freddie and Fannie, as to how they're going to address that. Hopefully, in the future, that'll be something that you can just build right into your loan but we don't have any of that yet. So that's my thought. Trip,
Yeah, so a couple of paths there that I heard from both Alan and Sean. One of those is when you're say you're a first-time home buyer and you're going to approach a lender. Well, the type of financing is also important. And what I mean by that is, generally speaking, you're going to get a conventional loan, a VA loan, an FHA loan. Maybe if you're in an agricultural area, you're getting a USDA loan. Each of these loans have different provisions. They also have different perceptions in the marketplace. And what I mean by that is, let's say hypothetically that you as a buyer are wanting to make an offer on a house and you're one of several making an offer on that same house. I.e., you're in a multiple offer situation. Sometimes the type of financing will play an importance as to the priority a seller will receive or at least prioritize that offer. And whether right or wrong, it happens. And so it's important for the seller and the listing agent to kind of understand the different types of financing and to also be able to communicate that to the agent to their client that just because one type of loan is being used versus a different does not mean that a buyer is any less worthy than the next buyer who may be a conventional buyer. And sometimes it's important to kind of understand what are the real differences between these types of loans and what are the inspection slash appraisal requirements and what does that really amount to? In other words, is it significant or is it de minimis? Is it something that in the whole scheme of things, if one type of buyer is willing to pay much more and the risk is much smaller to use that type of loan, well, it's a smarter move in many cases for that seller to choose the type of loan that may not have been preferred, but the value was greater in light of the risk. So I think there's there's that whole idea of the type of loan. The other thing that struck me was when you get into a non-traditional type offer. And I just had one this past weekend where my seller was selling because they're wanting to buy a new house. They'd been pre-approved, but they were pre-approved on a contingency basis, meaning that seller had to sell their home first before they bought the other home. So fortunately, we found several buyers for them. One of the programs that was presented had installment payments. So in other words, they closed on X date, but they got two installments, and the first installment only had X amount of money, which was probably 60 to 65% of the overall value. Then the question became, does that really satisfy the lender's contingency requirement? So does the lender basically say 65% is enough? Fortunately, through going through this process, I realized and talked to the lender that no, that didn't. And but it's these kind of things when we talk about professional services, it's these kind of questions and these kind of structures and constructs that benefit buyers and sellers, but your professional needs to really understand how to navigate those. And the better they are at doing that, the more complex they can be, but yet keep it simple. I think it puts the buyers and sellers in much better position. And you see back to that fee discussion, how many thousands and literally could be hundreds of thousands of dollars that a professional can actually help you save possibly from going down a path that puts you in a really bad position. In this particular case, the deal ended up not going forward. And that, in my mind, was a good thing because this particular seller didn't end up getting into a contract that they couldn't honor and then having later, negative ramifications from that. So it's best to get into a situation where, all the parameters are discussed and analyzed up front, even if it takes extra work, than just assuming that, everything just works in a plain vanilla fashion. And folks, we're in a new world now. So there's more creativity, there's more business models, there's more structured type deals that can benefit consumers, that do benefit consumers. But it's important also to know the ramifications and the fine print on how these work. So, Alan, you want to
Yep.
go from
Yeah,
there?
my wife was talking in the background as she was walking across. Anyway, yeah, I have 3 points now. See if I can remember all 3 points. Number one is, we were talking about programs. So it's important to know, especially for like first-time home buyers, they're first-time home buyer programs. So that helps paint the picture for what not only you can afford, but also what kind of programs are available to you to help you navigate the waters. That's number one. Number two is a seller will not accept your offer without a pre-approval letter. So you need to get that from a lender. Okay. And the third thing, and this is really important for all you buyers to understand, is, and this is something that I just went through about a week or so ago, a couple weeks ago. I had an offer on a home. We went into contract, and the buyer's agent sent me a copy. I didn't ask for it, but kind of inadvertently sent me a copy of his buyer broker agreement. And you as a buyer must sign a buyer broker agreement with your realtor, and you must specify a commission that you are willing to pay in the event that a seller will not cover it. And whatever that amount is what it is. The agent sent to the seller, through me, of course, sent to the seller a commission agreement that the seller has to sign for the buyer's representative at a higher commission rate than what his client was willing to pay if need be. So basically, the buyer broker agreement was 2%. He sent to my seller to pay him 2.5%. Well, guess what? He can't take any more than 2%. Whatever you sign with your agent cannot take more. Now, if there is an agreement between the seller and the agent for more, like in this case, guess who that money goes to? You. There were some other issues that we had with that. We didn't like the way things were being handled, and we canceled with them. And the next day I had an offer from someone else who really wanted the home. It was a better offer and no games being played. But just know for your own protection that if you sign, let's say at 2%, the agent cannot collect any more than that from the seller.
I think that's an interesting conversation. We had a big conversation here yesterday, 4-hour long session with the legal counsel for the state of Montana. And that conversation came up. And again, going back to what we were talking about earlier, it's very important to have a conversation with whoever it is that will be representing you in the transaction. Make sure you understand what their professional fee is, understand the way that compensation will be handled, whether all by you as the buyer, portion by you as the buyer, and a portion by the seller, and all the parameters of that going forward, so you know exactly how this plays out with lending and all those kinds of things. But yeah, there's a lot of conversation we could have on this particular subject going down that particular trail. Tripp, any other wrap-up thoughts from you?
I think I've talked it out today, so thank you.
Well, fantastic. Well, thank you everybody for joining us again for this episode of the Real Estate Guys. And we'll sign off for now. We'll look forward to seeing you next week. at the same bat channel, same bat time. Talk to you later.